Hi, everyone. Good afternoon. Welcome to our third quarter and first 9 months of 2025 results presentation. Today, the presenting team includes CEO of MAIB, Georgy Shagidze, CFO Makar Stoyanov, and Evgeny Risovich from Investor Relations. Thank you for joining us. Thank you for your interest in MAIB. Together, we'll walk you through our key results during this quarter. And just to remind you, we will answer your questions at the end of the call. You can put them in chat. You can write me on email, or you can raise your hand and we will just enable you to speak. That's at the end of the call. Just before we begin, a very short disclaimer. This presentation includes some forward-looking statements. It has some expectations and forecasts. They're subject to risk and uncertainties, which could cause actual results to differ. We outlined several potential risks here, including macroeconomic, regulatory factors, market risks, operational challenges, and the results presented are consolidated group unaudited results prepared according to IFRS. I will now pass to Georgy to summarize the performance.
Hi, good afternoon, everyone, and thank you for being with us, and thanks again for it. So basically, in Q3, we continued strong performance across all the fronts. From the perspective of GDP, Q2 GDP is the latest, which is out, grew by 1.5%, with the September inflation of 6.9% and compared to 7% inflation in December 2024. The forecast for GDP growth varies depending on who is doing the forecast, and next year it varies between 1.5% and 3.9%. And the Q3 and Q4 GDP forecast also is expected to be positive within such a range. In terms of our strategy execution, we continue strengthening our position across all the products and segments. We are already about 900,000 MyBank users with 1.5 million cards. 82% of our deposits and 79% of our loans are granted via our mobile banking. In terms of financial performance, we grew year-on-year loan book by 32.9%, and Q3 return on equity was 25.7%, leading with the 9 months return on equity at 21.8%. We'll go through details for each of the areas on the next slides. Evgeny, please.
Yeah, thank you, Georgy. So we will now go through macroeconomic update and some political updates as well. Then back to Georgy with the strategy, and then Makar will summarize financial performance. So I will just start with this very brief snapshot of the country. So last time we spoke back in August, we had some rather negative news on the economy, but this time it's a lot more upbeat. First of all, as Georgy said, Q2 GDP was positive. There were upgrades quite significant from both IMF and the World Bank. For 2025, IMF upgraded by 1.1 percentage points. This is based on the previously negative expectation for the global economy, reversed, and as a result, we've seen these rather big upgrades. Also on the ground, we are expecting that agricultural season will be better than last year's, and some performance in the Q3 and Q4 will come from that. Another positive news is on foreign direct investment. As you can see, it's 115 million in Q2. it's for the first half, the figure is just shy of last year's full year figure. So it's once again very positive news on the foreign investment in the economy. There is some decline recorded in incoming remittances in the Q2 of 1.5%. However, we think that these numbers do not reflect the picture of remittances fully. More telling is the performance of the exchange rate, which continued to be stable despite a very large and widening current account and trade deficits. So we go next to the forecasts, and as Georgi said, we have some wide-ranging estimates, rather conservative. We have the base rate case from Ministry of Economy that suggests that the economy will grow under 2% in the next 2 years. However, international forecasters are much more upbeat, and we have growth of up of almost 4% from some of them in the next 2 years. In terms of the fiscal performance, the budget deficit is kept under control. So annualized number is currently estimated at 4.9%, which is below inflation, and as a result, we expect that debt to GDP at the end of the year will drop. It has dropped already from full year 2024 from 38% to 36.2%. Now, covering the inflation monetary policy, inflation has dropped to 6.9%. This is just outside of NBM targets corridor, and as a result, NBM has acted and lowered the main policy rate to 6.0% over the two decisions in September. Also yesterday, it is not reflected on the chart because it came out yesterday. There was a monetary policy decision which lowered the required reserves for both MDL and foreign currency for banks. This measure is designed to inject liquidity into the system. We have seen very strong growth of lending. Makar will demonstrate this later. And loans to deposit ratio for the banking system rose to just shy of 73%. And just to remind you that a year ago, it was below 60%. So clearly liquidity is needed for this market with all the strong lending growth. Another important point for us and for the country is the performance of the real estate market. We are tracking both the activity on the real estate and the prices. So prices rose by 33% year on year. As a result, we saw quite a sharp decline in the number of transactions for the past two quarters. They're almost 60% down from Q4 peak. However, that said, the market remains fundamentally very healthy, and mortgage levels are far below the peer group countries. So there's some way to go in this market. So we think it's a pause, not a hard break. Now going to trade performance of Moldova. So the currency remains rather flat despite the widening current account deficit. Just to point your attention to rather flat performance of the currency against the euro and slight increase against the dollar. At the same time, reserves, which are now denominated in euros, previously they were denominated in USDs, reserves have grown slightly in the last quarter. So this suggests that underlying flows of currency are very strong. That's why we think that remittances picture is perhaps incomplete. To comment a little bit on the performance in trade, in Q2, we saw exports of services surpassing the exports of goods. Now, of course, Q3 and Q4 will be large goods exporting quarters. However, this is an important point. In Moldova, export of services grows by double digits, especially IT services are very important here, but also travel and transportation. As a result, exports are just slightly down, considering very large decrease in re-exports. This is overall a rather good performance from Moldovan exports. As per Ministry of Economy, trade is due to resuscitate in the second half of the year due to the recovery in agriculture. And now finally, to mention the key developments in the political sphere. Of course, the most important political development has been the election on the 28th of September. This election yielded an outright majority for the PAS party, which is the supporter of EU integration. It injected some stability in the next few years in the country. And the Prime Minister has been appointed. He has a financial and economic background. So this is rather positive. Also, coincidentally, S&P Global issued its first rating for Moldova, rating it BB minus, which is on par with such countries as Armenia and Northern Macedonia, which are long-term issuers of Eurobonds, and their rates are rather, are rather low. This suggests that Moldova is rated. This rating is quite good and upbeat for Moldova. And finally, just a few days ago, European Commission issued the report on Moldova progress in the EU accession, which again, we see very, very positive. Most areas reported had significant progress, and a lot of areas some progress. So next step is start of the negotiations. Unfortunately, they're blocked by Hungary, but European Union is working to start the negotiations. We have a visit from important European officials here today. So with that, I will pass back to Georgi to discuss bank's performance.
Yeah, so this is the slide about MAIB at a glance, and what we can highlight here is maybe our market position with the market share in loans at 37.7% and in deposits with 35.5%. We are by far the largest bank in the country across all these metrics. We'll speak about the financial performance in more detail. Few areas that we can highlight here are net profit growth by 37.2%, return on equity being 25.7%, and return on asset being at 3.4%. If we move on to the next slide, this recaps our strategy to focus on customer and ensure that we have the best customer experience, continue digitalization, and continue adding the features with the customer-centric approach with the best UX and UI in our mobile banking, continue branch offloading, and the focus on payments. Again, you know that we are exploring our to establish our subsidiary in Romania, which will be asset light, digital only, where we will invest step by step as the subsidiary progresses. Next slide. So key operating highlights during Q3. Of course, you may have seen that MAIB Supervisory Board designated Makar to to succeed me when the time comes. And I'm really happy that the board designated the management member. And of course, I'm happy that it is Makar, and this will happen only subject to, of course, NBM approval at the right time. But the news is very positive. We launched, and Moldova already became part of SEPA with the leadership of National Bank, and then we actively already work with the European payments through SEPA. So this is one step closer to European integration. Last month, we signed the quite exciting project which will support the capital market development locally and connecting local capital markets with the international ones, so that Bucharest Stock Exchange, along with us and other partners, have the desire to establish the stock exchange here, which will again be connected to the international capital markets. Plus, it will use the platform that Bucharest Stock Exchange has, and it will use this advanced platform. Another exciting news is that we launched Ami, our virtual assistant. It is already available through our mobile app, through the kind of already secure environment. It's learning quite fast, but it is already there to help our customers. So our customers already speak with robot, and this project is quite exciting and challenging. This is part of our AI initiatives. One of the initiatives is the chatbot. You may remember there are other initiatives related to predictive AIs, back office optimizations, and so on and so forth. Next slide. Yes, again, we continue strengthening our position across digital and payment initiatives. 82% of our loans are granted, our deposits are granted from mobile banking, and 79% of our loans are granted from mobile banking. Our monthly active users are 69%, daily active users are 37%. We, based on the third-party independent research that we are using to basically have hand-on pulse, always we are number one in top of mind, number three loved brand in the country, which is of course the place that we are proud to be. Next one. Next one. This is the summary of the financials. Makar will continue detail. Net profit year-on-year, quarterly net profit year-on-year grew 37.2%. Return on equity reached 25.7%. This happened on the net interest margin of 5.3%, which grew 0.3% percentage point quarter-over-quarter. Our cost-to-income ratio, which is, by the way, seasonal, so Q3 is the lowest, but still it's good to see it is in 43.3%. And this all happened with very stable and strong capital adequacy and liquidity ratios, both of them being at 20.7% and 284.4% respectively. Makar, please.
Yeah, thank you, Giorgi, Evgeny. Indeed, let me So what you see here is a sustainable, strong growth on the loan book side. It's 4.5% quarter-on-quarter and over 32% on a yearly basis. We see a strong performance and loan book growth across all the segments. Retail still continues to be the outstanding from point of view of the growth. If we talk about the retail, it's increased by 8.7% on quarterly basis and over 47% year-on-year. It has been followed by the SME portfolio, and then corporate book still the same good growth, close to 1% on the quarterly and over 22% on the yearly basis. This, of course, is sustained by continuous growth of deposits. If you look on the number, overall deposit grew by 0.8% last quarter. But important to highlight that if you look on the retail, especially on the retail, the deposit side, term deposits, it has a strong growth around 3.3%. So retail and SME had a strong increase of current account and deposits. We had some decrease in the one important corporate clients, which is quite cyclical. And the Q3, it's exactly that period during which a client has been using its funds for specific acquisition, and we expect it to come back in the coming period. But if you look on the big number, small tickets, retail and SME, we have a quite strong, promising, continuous performance, strong performance of the attracting funds, be it current account, be it terms. As a result of that, if we go to the next slides, as already mentioned by Georgi, our profits, net profit increased by 28.5% on a yearly basis. Return on equity is over 25% and return on assets over 3.4%. Pre-provision and income tax, it's even higher. Of course, the seasonality, we expect stronger performance also moving further, but the Q3 is one of the months where we had a very strong performance, and we are happy to see it. If you go to the next slide, what stands behind this, the profits? Net interest income, it's sustainable. It has been growing by 7.3%. And you see that it's been growing from both sides, loan book, which we have seen, and also the net interest margins. We managed to increase it last quarter by 0.3 percentage points up to 5.3. You see also cost of funding, of course, has been increasing, plus 0.9, but yields on loans and on the securities had upward trend. As already was mentioned before, the country faced quite well and managed this energy shock at the beginning of the year, where we had inflation spike, close to 10%, 9-10%, but with a strong on-time reaction of the authorities of National Bank and monetary policy, the country managed to decrease it. So we now in the monetary easing phase, and the trend on the base rate, on the inflation is downward, as already was mentioned, the macroeconomic part a bit earlier. If you go to the next slide, around one-third of our operating income is coming from non-interest income. Here we have two main components, is net fees and commissions and net foreign exchange. Both have a positive trend last quarter. If you look at the net foreign exchange, it's been continuously well-performing quarter on quarter on a yearly basis. We have all 236 million income from FX compared to less than 200 a month ago. We also we saw quite good performance of the fees and commissions on quarterly basis. It's some decrease if you compare to the year ago, but important to highlight that during the last 12 months, some additional fees and costs on the cards business came, giving the kind of the closeness integration to the EU, interchange fees and cap and so on. Important to highlight, even though if you talk about year on year, there is some decrease, we manage it quite efficiently and we have positive trend last period. As a net fees and commissions income in absolute value, we have also upward trend, 7.4% quarterly basis. Some decrease, I mentioned why, it's mainly cards business, but again, it's structured and profitability-wise well managed. If you go to the next slide, of course, we put a lot of emphasis on the operational efficiency. As also Georgi mentioned, our cost-to-income ratio has been improving quarterly on the quarterly basis, but also on the yearly basis. There is some seasonality behind, so Q3 is quite good, and we're happy to see it. But what is important to highlight that our operating expenses are well under control, and evolution is 2.4% increase. The main driver, it's because we invest in also in our people. We have some adjustments last month. Also some provisions for the unused holidays were made. So it's kind of the people side, the HR side of the equation of the OPEX. If you look on the other type of OPEX, you see with the kind of the upper side. If you compare to the previous quarter, it's even decreased. And cost per assets is managed around 0.8%. Next slide is about the total. Next slide. The NPL, the quality, all this growth, both on the loan book, on number of clients, digitization, profitability, comes with a healthy portfolio. Our NPL ratio has slightly improved by 0.1 percentage points, down to 1%. Our cost of risk went down to 0.5%, while our NPL coverage has even further improved. It's a cash coverage close to 350%. So kind of the growth which we have is sustained by a strong, well-managed risk profile of our clients, of our portfolio. And last slide is about the total, the liquidity and capital story. Our capital adequacy ratio has been improving last quarter by 1 percentage point. We have incorporated part of our profits for the first part of the year. So it's 20.7 and the minimum is 70%. So both capital adequacy ratio and Tier 1 well above all the minimum requirements of National Bank. RWA density, again, it has some seasonality as well, but it's slightly increased by 1.6 percentage points. So we take across the business lines and product portfolio, we take a close look how we optimize RWA usage and as the result, capital management. Our LCR it has also improved. If you remember last quarter, I mentioned that by our kind of we used the tactics to optimize our liquidity and investment. So we had 164% in LCR 3 months ago, still above, significantly above any minimum requirements, be it internal, be it of National Bank. But this quarter we closed with LCR 284%. So it's well-performing improvement in the performance, financial operational of the bank, well capitalized and with a high, strong liquidity. Thank you very much.
Thank you, Makar. So you now have the ability to ask questions. You can type it in the chat or you can raise your hand. We'll enable you to speak. Okay, there are currently no questions, so let's wait another 20 seconds and see if maybe some appear.
Okay.
Okay, great. Thank you very much. And yeah, thanks for your interest in MAIB.
Thank you very much, everyone.
Have a nice day.
Bye.